Good afternoon, Blue Line traders. I'm Sean with Blue Line Trading, and this is your daily market update for February 9th of 2023. It's currently 1 p.m. The market just closed. We had a pretty aggressive push down today, which was a little unexpected, but we did say that this was possible in the video that we put out 2 days ago. So without further delay, let's jump into the charts and take a look at what's going on. Starting with the market overview, we are starting on the S&P futures chart on a 15-minute time frame, and I've got your close from yesterday marked right here. When we follow the median line in red, you'll notice that the overnight session was 100% net long with all the price action above the median line, and buyers actually started the session at the lows and were pretty aggressive. We saw a sustained uptrend that lasted all the way into the overnight high. That high was put in at about 2:45 a.m. to 3 a.m. and we did initially see conviction from the buyers as they took out the high of yesterday at the 41.68 level. Now that conviction was short-lived. We had a rejection of higher prices that was marked with this bearish dark cloud cover candlestick pattern. From there, we came back down into the open. On the opening print, buyers failed to put in another 15-minute high, and then from there things got pretty bearish and we went into a sustained downtrend that lasted the entire session. The opening print was the high and the closing print was the low, which is pretty bearish, but there was a lot of clues that this was going to take place. Now, if you saw the video that we put out 2 days ago, we did mention that this was a possibility. At the time, because of how strong this rally was on the day that we did that video, you can see from a time perspective, buyers were controlling the market most of the day. It looked like we wanted to go up and that from this pullback right here, we were going to go up and put in a new high. But the failure of conviction right here changed that drastically. And there was a lot of clues from that point that this was going to happen. And in the morning update, we did mention if the 786 retracement failed to hold at 41.17, that there was a likelihood that we were going to come down and revisit the 40.90 zone to take it out. And currently that's exactly what's happening. With the market update that we sent out 2 days ago, we also sent out an educational video about RSI. And there was a lot of clues in here that this was a possibility once this conviction was failed. And to show you that, I'm going to draw a trend line real quick. So off of our bottom, we're coming up. And let's try to make this real clean right here. You see we clearly have a trend. And off this high right here, you'll see it was marked with bearish divergence. That is a clue that any further upside could fail. We came back down. We tested the trend line and buyers went for a last attempt to the upside but failed to put in a new high. Something else very telling in the RSI happened at this failed conviction right here. You see the RSI moving average on the 15-minute time frame? The momentum is bullish up until this point. Then we get the bearish divergence, which back tests the moving average, and then we snap the moving average right here. We do get back above it, but I would count this as a back test of that moving average, and then we get really bearish and we come down for the rest of the session. That was a major clue when this snapped right here on the opening print that we were going much lower. We even had a back test in here. Now the median line, which is around the 786 or the low of yesterday, was one important area I was looking for today. And we snapped it on this really large candle right here, which means that sellers had a lot of conviction here. They come down, they back tested it, and then they went for follow through and got it all the way down to the zone that we had mentioned 2 days ago for that ABC theory that initially we believed was unlikely until this happened. We were considering it more, and with the break of the 786 retracement at 41.17, which is the level we sent out in this morning's update as confirmation we were probably going lower, this scenario became a lot more likely, and that is exactly what played out. Now, is this the bottom? Well, let's move into the big question of the day, and we will get to that. The big question of the day is going to be, with this ABC theory playing out and hitting it pretty much to the penny, is this the bottom and should we be looking up from here, or is more downside possible with how bearish this price action was? And to answer that, we're going to look at all the evidence that's available to us. Starting with the price action, and we will start with the overnight price action in the green box, it is going to be bearish. Now, before I go into why it's bearish, I do want to cover that initially this was bullish. It changed at this point right here where we saw a rejection of higher prices and the failed conviction from buyers. That is why it's bearish. And then the fact that we came up and tried to put in a new high and failed to do so, and the RSI was very telling with the amount of divergence that we were getting, that is why it turned bearish. But in normal circumstances, if we had put in a new high here for educational purposes, this would be more bullish because it would be the opening print as the low and the closing prints would be the highs, and we would have taken out this high most likely. Moving into the daily session price action, it is also bearish with a bullish lean. It is bearish because the opening prints were the highs and the closing prints were the lows. But the closing print, almost to the penny, was the ABC theory, and we held that area with a very strong rejection of lower prices going into the close. Coming down to the intraday volume, it does favor the sellers as there's a lot more selling in here, which means that from a time perspective, the sellers had more control over the market today. When we pull up the session-based volume profile, we did have a higher point of control today and an engulfing value area. The session volume profile shape is very, very messy, which would indicate that there was a lot of volatility today, and there was a lot of volatility in these swings to the downside and the sustained downtrend. When combined with the fact that this is mostly selling from a time perspective and the point of control is higher, this is definitely a rejection up here, and we can suggest that this is all shorting activity at the top and then selling as we come down. Now we do have a pop on the volume profile at the bottom, and we did see a strong rejection of lower prices, and we'll get into that when we get into the combination of all our evidence. Moving over to the daily time frame to look at our daily candlestick location and structure, the structure is bearish. And the reason the structure is bearish is we had a lower open and a lower close below the support up here that would have needed to hold at 41.17 to continue up from here and not have this pullback. When we think about the location though, it's going to be neutral. And the reason it's neutral is we can count this as a somewhat of a bearish kicker. I mean, a bearish kicker wouldn't have this upper wick really, but we are opening near the closing point of yesterday and then we push down from there. So that is bearish, but then at the same time, we have an explanation for it in this ABC. And when we pull up that ABC, I'm going to run the extension right here so you can see it. We wicked right off of that zone. And again, on the lower time frame, strong rejection of lower prices at that zone, which could suggest a reversal is taking place. We don't have confirmation of that yet. Coming down to the volume, initially I had said it was bullish, or there was a bullish lean because I had put this in before the close, but the closing volume did push us up a little bit more. And I'm going to say this is more neutral at this point. And the reason why is we have a tick up in volume as we come down, which is not a good sign if you're looking for a reversal. But then at the same time, we do have a lower wick, and this volume pushed up towards the end of the day. And that's what put it in the higher percentage point above where we were. So it's a little bit unconclusive, and it's pretty close to where we were yesterday. But at the end of the day, look at the volume coming up and look at the volume coming up right here. So I'm not too worried just yet as far as, a breakdown in the market. I don't think that's what's happening here, and we're still above the pivot right here. Moving over to the market internals, starting with the VOLD, you'll see that we had a pretty choppy move at the beginning of the day, but it was gravitating to the downside. And then the control was really gained by sellers at this point around 10 a.m. And then we went down from there almost in a trending manner and broke the benchmark. So that is a strong day for the sellers. And again, we're seeing this shift in control. Now, yesterday, we didn't know that it was a shift in control because we only had one bearish day, but this confirms it, that we were shifting from buyers to sellers and that ABC theory was going to play out. Coming down to the ADD, you'll see that we opened in extreme positive territory, which means that we opened way out of balance, and the price action does reflect that because we opened way up here, median lines way down here, and we had failed conviction. So we knew that at least a median correction was likely, and not only did we get that, we blew through the median line pretty aggressively right here. So this aggressive move down was a clue that at this point, buyers were going to fail holding this market up and that we were going to see more downside. The other thing that I notice here is when we compare the ADD to the SPY, this is a lot more aggressive to the downside than the SPY initially was, which was a big clue that on this candle, the median line was not going to hold, and it didn't. Coming up to the tick does favor the sellers with most of the activity towards the bottom of the range. Now, I don't see too many aggressive ticks in here throughout the day, which is interesting because we were moving down pretty aggressively. So maybe possibly things aren't as bearish as one would think. Now, when we come down to the cumulative strength portion of it, sellers did build pretty strong cumulative strength, but it's nothing like what we've seen from the buyers recently. Now, from this point right here, we have this down day on the buyers' strength, and then we shift towards the sellers, and then when we come back up, it's not as high as the previous day, and now we're getting even deeper. So is this a shift in control taking place on a larger scale? It's possible, but you also have to remember that we believe, or at least have a theory as of right now, that the structure coming off of the lows right here back in October is a corrective structure, and we are getting somewhat close to the top of the structure. So one could argue that we are going to start seeing a slow shift towards the sellers on a larger scale as we get up towards those top targets. That is a clue that this structure is corrective and we are going to come back down and see new lows, because there is a lot of people and a lot of services in the market right now that are saying, oh, the bottom's in, the bottom's in. Well, we're not getting any evidence that the bottom's actually in. In fact, this move really does look corrective. When we look at the bottom point right here, the volume is tapering off. It comes back up as we have this middle connector wave. And now we're just kind of, low volume, kind of hanging out here. You would think that if we were coming into wave 3 right here, and this was a 1, 2, and we were coming into 3, we would have massive volume that takes out this volume right here. And we're just not getting that. The other thing I see here is this is very choppy. This whole move is choppy. It's cleaning up a little bit right here, but on the lower degrees, it's still very choppy, which tells me that this is still corrective. When we look at the S&P sectors, we started the day with risk on leading in strength. And I would say, as far as what I'm seeing here, everything's kind of flat. You have a few 1%ers pulling back, mixed in there and sprinkled, but for the most part, I think this is going to be pretty much flat at the end of the day, which is interesting because we pulled back pretty aggressively until this point, which tells me that a lot of people are anticipating this area to potentially hold. When we combine all the evidence that's available to us, it is very clear that when buyers failed to hold their conviction at this level and then failed to make a new high coming into today's open, something changed drastically in the price action. And because of that, we snapped this trend coming up. Buyers failed to break these highs right here, and that was a very strong indication that we were at least coming back to this point right here, which is the median line. Now, at the median line, from there, we came down, we broke it, and the next important level was the 786 retracement, which was at 41.17. We danced around that area like we wanted to hold it, and then eventually we back tested the median line, and then we broke it. So they found the liquidity they needed, the sellers did, and then pushed us down lower. Now, based on the evidence, it's also very clear that we had from this point where these important levels broke, a theory that we would come down to this level, and that level held. And not only did it hold, it held with a pretty strong rejection of lower prices. The other significant thing that we need to consider before we combine all our evidence, which is something we mentioned in this morning's update. And I'm going to pull up the session-based volume profile. And before I go into this, if you haven't done the trading school or reached this point in the trading school, when we pull up the session-based volume profile, each day is going to have a point of control. And we call those POCs. That's what it stands for. And typically, when the market is moving efficiently and is going to get follow through, the point of control will be taken out the following session at some point before the movement continues. And you'll see it right here. We were coming down. We hit this point right here, which is the low of day, but then we came back up to take out the point of control from the previous day. Then we went lower. We opened within this range, which means that we obviously took out the point of control. Coming into today, even though it looked like we wanted to climb higher, we had this POC that wasn't taken out here, and we also had a POC that wasn't taken out here. This one was right by the 786 or right below it, and this one was right at the level where the 100% extension would be for that ABC down, which was a major clue that this was a possibility. So when we come over to our theory, I do still think that we're in this blue count, which is the minor count, wave 3 coming up. And within this minor count, you have your lesser degree count, which is the purple count, and it would suggest that we're still in wave 3. So your intermediate, which is the yellow, the highest count, is wave C. So at this point, what that would sound like is we're in the lesser degree wave 3 of minor wave 3 of intermediate wave C. Now breaking it down even further, within this purple count, we should have 5 waves coming up. And initially, this high that we put in, that target that was very clearly hit at 4207, we believed was the top of wave 3, and then we came down. We came down to about the 382. And we believed at the time, when we climbed off of that level, that that was enough to suggest that wave 4 was in. Well, that's no longer the case here. It looks like we pulled back further. So at this point, I still think instead of being in wave 5, I think we're still in wave 4, and that this is that ABC we were talking about. Now to add confluence to that, this is the pivot that we've been talking about right here, and that would be the top of wave 1 of this purple wave 3. Elliott wave states that the top of wave 1, or what we would actually call the top of, or the starting point of wave 2, cannot be encroached on by wave 4. Now, when we look at this, we're only encroaching on it within the wicks. If we pull up a line chart, we are still good. In fact, we still have room down to about 40.82. And technically, they can overlap even more because this could be something else. It'd still be bullish, but we could have a diagonal up, or this could even be a 1-2-1-2 setup, which would drastically increase the targets up here. Now we won't know that until we get more substructure and we see a reversal and we can kind of measure what's going on in here. But ultimately, with all that said, I am still looking up. So ultimately, we don't have enough information to tell you exactly what's going on here. But with the information that we have as of right now, with the price action we had at the end of the day, it does look like the market's trying to pivot here. So there's a possibility that what we had mentioned, ABC, and then pivot, is going to play out. Now, at the same time, we do have some pretty bearish price action on ES, and then even more so when we look at SPY, which doesn't have the overnight market. Look at the bearish engulfing candlestick we had today. Now, we held that level, and on SPY, we actually hit the 100% extension almost to the penny, but this is still pretty bearish looking, which means that yes, this could shape up as a diagonal and we could come down lower. What would be the confirmation of that? We break the 100% extension with conviction. That would be it. So as of right now, to answer the big question of the day, in one not long-winded sentence, the market's telling us it wants to try to pivot here. If it does not, I think we're still looking up at 4,300 for our next target, but we could go as low as this area or this supply zone on the chart right here, which is right around 4,000. But with that said, if we break this level, the 100% extension with conviction, I am going to take off bullish positions because coming up in a diagonal is not a reliable pattern, and the market's going to have to prove to me that it wants to be bullish before I will trade it bullish. Once we break this level, there could be enough pain in here that's going to really mess up my profits on those calls or the lack thereof, which means that I don't want to be holding through that. So that is a level I'm going to be watching very closely tomorrow. Lastly, we'll glance at our watch list tickers. I'm going to start with the SPY, even though we just showed it a minute ago. And let's remove everything on here, actually. Remove drawings. And basically what we have today is, again, this ABC off of our top probably is what's playing out. 100% extension hit right here. Now we do have to use caution, just like I said on ES, because one, we have a very large engulfing candlestick on just marginally higher volume, but it's still not higher than our move up right here. And we're below the 8 EMA on the daily time frame, and the quicker moving average, which is the 8, is pointing down, but the 21 is still pointed up. The other thing I see here that we need to be cautious of is the fact that we broke the moving average on the RSI. That would indicate that there's possible bearish momentum starting in the market. Now we can quickly regain this, and the moving average is still pointed up, and a lot of people like to use this moving average as a trend indicator, and when we back out, you'll see it is an accurate way to indicate what the trend is. We have a top right here, and now it's pointed down all the way till the bottom right here where it's pointed up. We have this middle connector wave potentially here. We pull back, and now we're still pointed up, which means that, again, that's a clue that this is just part of the substructure. But when you combine it with the fact that there's the bearish engulfing candlestick and we broke the 8 EMA, which has been our guide the whole way up, except for right here where we tapped the 21-day moving average, we tapped it right here as well. It's an indicator that we could potentially go lower. It's not telling us it is going to go lower just yet, but it's saying, hey, watch out. I still want to go up, but there's a potential I might go lower first. Moving over to Amazon, which I said we were removing yesterday, but I just want to see what it did today. Again, further breakdown. So yeah, what we had mentioned is probably playing out, but again, it wasn't very tradable. Next is Meta, and we've been using Meta as a hedge trade, and it's actually worked out beautifully. It has netted us more profits than the losses that we're currently in on the SPY calls that we were holding. And going into tomorrow, if I end up taking the SPY calls off at a loss, and I told you what would prompt me to do that, I'd probably take this off if it found support at the 8 EMA. And the reason I do that is this trade did its job, and the last thing I want to do is get a bounce off of here going into the following session. I lost my money on SPY, and then I would break even or lose my money here, and then the hedge trade didn't do its job. As of right now, if things play out where I have to take off those SPY calls, and even this staying where it's at, it did its job. I'm still ahead of the game. I'm finishing with more money than I started with. So I'm okay with all this. And then we come into the next session or the beginning of next week, fresh, all cash, ready to go to trade whatever ends up happening with the S&P. And I'd probably stick to the indexes at that point because this market's a little unpredictable as far as how we're going to get to our target. And when that happens, the safest money is always in the indexes, which is the SPY, the QQQ. All those are where you're going to want to be putting your risk in. All right, last we're going to look at Tesla, just because somebody had asked me about it at the beginning of the week or a few days ago. And what I had found when I looked at this was that 225 is a potential top, and we are gravitating towards that. And the daily RSI still looks good. Let's look at the 4-hour. Is this getting exhausted? And it's been getting exhausted ever since this point here, which would tell us, based on that video I sent out the other day of how we use RSI, let's see if we got a trend in here. Not there. Well, we definitely got something going on up here, because we bounced off this area multiple times. So when would be a good time to short this? Well, obviously not right now. Even though you have a dark cloud cover right here and a gap below, we could continue to go up. And in fact, I don't have any theory that would suggest that this is going to terminate right here. I think this is going to terminate a little bit higher. Now I could be wrong, but I think part of the reason why this didn't go to new highs today was it is extended from the EMA, and I would guess that it's also extended from the Bollinger Band or near the top, so it might just need some consolidation. Let's pull up the daily one more time. Yeah, so I would wait for a break of the trend right here and then see what the RSI is doing and make a decision there. Now, we're looking at the 4-hour where we're getting these signals. Would I swing trade off the 4-hour? Probably not just yet. I would probably wait, depending on how severe the pullback is, for a break of this to confirm that we are going to come down. Because anything above this on the daily might just be substructure, and then you go short and then it bounces off of it and then goes to 225 where you should have actually waited for your entry. So I would wait, and that's a 200-day moving average right in that area too. That's very strong confluence right there. So that's what I'm thinking on Tesla. I might be interested in shorting this. I mean, we're deep in profits for the year, so we'll see what happens when we get there. All right, that's all I got for you guys today. If you have any questions, send them to me. Just a reminder, there's no videos on Fridays, but I will have a morning update for you and potentially an audio update on my way to work if things are moving. So, all right, I'll see you guys all next week.